Welcome to the Real Retirees of New Jersey, powered by Liberty Financial Group and Artemis Wealth Advisors. Randy and Peggy Fisher want to help you retire once and retire right. Get more information at therealretireesofnewjersey.com. They never throw the first punch, but they're always a knockout.
We're going to talk about bubbles, not the kind that you blow with the little thing that comes out of the wand in the summertime when, everybody's getting ready for fireworks at 4th of July. We're talking about the stock market. What's going on? My name is Jeff Miles. Welcome to the Real Retirees of New Jersey with financial advisors Peggy and Randy Fisher. I want to tell you first, you can go and get tons of information about what we're talking about in this podcast and so many other things. LibertyFinGroupLLC.com. Also, retirewithartemis.com. Again, that's retirewithartemis.com and LibertyFinGroupLLC.com. Without further ado, let's jump right into it. Peggy, ladies first, how are you doing?
I'm doing great, Jeff. How are you today?
Very, very good. I know that it's warm where you guys are in New Jersey. I'm in the Atlanta area, and it's been warm here for the past few weeks. Are you guys handling the heat all right?
Yeah, we're in the cool 90s, Jeff, so it's really nice here.
I'm in air conditioning right now, so.
Yeah, so we're feeling good.
See, and that's the thing.
Stay inside.
Right where you are. Yeah.
Stay inside.
No reason. I remember living in the New York area, and then this is the time of the year when everybody is rushing to the shore and all of that, like Red Bank or whatever, and doing all that. But I don't know that they're doing it in this heat right now because it's
Jeff, I'm going to tell you, as you bring up the beach, we did rush down there yesterday because we had a nice day off for the holiday, and we rushed down into 2 hours of traffic there, and we rushed back in 2 hours of traffic.
2 hours of traffic back.
But awesome. I will say this. We went to beautiful Bradley Beach here in New Jersey, and it was gorgeous. And you know what? From where we live, about an hour from Bradley, it's a good 10 to 15 degree temperature. So it was beautiful down the shore yesterday.
Oh, that's perfect.
And the ocean, I think, was like a cool 60 degrees. So my feet went in there for about a half of a second, and then they were frostbitten. So
it was freezing cold. It was cold.
Yeah.
There's no doubt about it. It's too early for the beach.
Yeah, I mean, that is kind of the thing, is it the water hasn't quite warmed up to the rest of the outside temperature.
It definitely has not.
Not even close. It's like you walk down, well, it was about, 93, 94 degrees when we left our house. By the time we got there, it was like 80-something. And by the time you walked from the sand to the water, it had to be another 10-degree difference. So it was amazing. Yeah, it was about 77 degrees standing by the water. You didn't even need to go in.
It was absolutely beautiful. We had a great day yesterday.
But, you go to the beach to try to go in the water. Yeah,
right.
It was numbing. That's how cold it was yesterday.
It was.
And that's just uncomfortable. That takes all the fun out of it, man. Because especially if you get a little sandy and then it's cold at the same time, that is just a horrible combination. So,
yes, it is.
All right, so let's talk about bubbles. You guys probably saw this. Fox Business had Harry Dent on.
Oh, yeah.
And he loves to talk about the bubbles in the stock market and an impending doom of what could happen. I think he said mid-2025 is when the biggest effect of this could happen, that the run-up that's been going on with the stock market could burst. When things are going on like this, how do your clients feel, or do they feel like this is one of those situations where they're rushing into your office to say, hey, what's going on? Are we going to be okay? And are they going to be a victim of this bubble, a la what some people experienced maybe back in 2008?
Without a doubt. I mean, we've had a number of different calls, especially when you have the naysayers that are on the airwaves and the telephones and the TVs and the internet and everything else, right? I mean, information travels at the speed of light these days, right?
Oh, yeah.
There's two things that sell the best: sex and bad news. So bad news,
in that
actually,
order, by the way, right?
Probably. I wouldn't doubt it. And since we're not a sex show, we have to talk about good news or bad news. So bad news does travel fast. When you think about that, I mean, you think about all the CNBCs and MSNBCs and Fox News and ABC, NBC, all these places. They have to have eyes on their TVs or ears in their listening group, right? And the best thing to do is to talk about things that can be impending of doom. Oh my gosh, your money can lose, 50 to 100% or, an 86% decline. People are going to kind of tune into that. If they say, oh, things are great, how many people are going to tune into things are great? the reason why people watch the news, they want to see what building burned, who died, and what car crash there was, right?
That's why it leads,
So,
right?
Well,
it's
the news
crazy.
Is best
it really
too for
is.
fear mongering and
Yeah.
crazy, thoughts of what are happening and what's going on. But the good news with us is even when our clients do call in, because we do have some clients that, go right to those kind of like crazy, oh my God, someone said that this is going to be the biggest crash ever of our lifetime, And we just do a lot of protectionary things, and we have a lot of protectionary products with our clients. So most of them aren't, saying to us, oh my God, what's going to happen with my money? We already have everybody set up in very nice protectionary places where, if the sky is falling, they will be
Right.
okay. Absolutely.
I'm sure in their end, it's probably more of a thank God as opposed to an oh God, with everything that's coming along.
Absolutely.
How long have they been calling for a recession?
It's been
Right?
about 3 years now, it seems
Yes.
like.
About
correct.
3 years, right? I mean, I don't know how many meetings that I've been in, how many phone calls I've been in, how many lunches I've gone to with, economic advisors and economists and all these different people. And you listen to the news that's on, or JP Morgan or anybody else that's out there that are actually calling for the destruction of these markets.
Right.
And every time they call for destruction, it seems to hit a new high. Right.
Yeah.
It's almost like the same thing. It's the Donald Trump syndrome, right? Every time they actually want to lock him up, his ratings go up higher. It's the same thing with the
more
market. It raises more
Yeah.
money, right? So,
Yeah.
no one can predict when the markets are going to go. I mean, let's be honest with you. It's almost like a heavyweight boxing match, right? Everybody thinks that, all the consternators before the match are saying, oh, that right hook's going to get him or the undercut's going to lay him on the mat. It's the punch that they never thought was coming that lays them out. And it's the
Right.
same thing with the market. It's the thing that we never thought was going to be possible is the thing that hits us. Think about the last one, COVID. Who would have ever thought that a pandemic would have come out of the sky and literally leveled the entire global marketplace? Nobody.
When you
Nobody
go
could have
back to
predicted that.
I honestly didn't think that was going to last more than a couple of months.
I actually
didn't
said
either.
to my
The
friend
worst.
Jeff, I said, they said we have 10 days to wait. And after
Yeah.
10 days,
Yeah.
life is going to be great. Guess
Right.
what?
Right. Yeah.
2 years later, right?
Crazy. It's
It
those
did
type
seem
of
like it lasted forever, yeah.
Yes.
It's those type of events that you can't foresee happening, and that's actually what causes the destruction in certain spots, right? We keep hearing this thing about, we're in have an impending bubble coming. But there is an impending bubble because every time you turn around, the market's hitting a new high.
Right.
But why is the market hitting a new high? Well, we're actually developing new technologies that are today that we didn't have 3 months ago, 4 months ago, 2 years ago, called AI, right? AI is literally changing the world just as if the dot-com bubble changed the world in the 2000s.
Absolutely.
And before that, in the 1950s and 60s, the technology of air conditioning and moon travel and space travel changed the dynamics of all those different things that actually gave us microwaves, air conditioning, right? Automatic cars instead of actually having manual, right? Transmissions. All these little things that led to the next generation of a boom that's been happening. And it's the same thing that's happening these days. I was looking at some valuations just the other day of some stocks back in the 2000 dot-com bubble. And some of the valuations were 50, 100, 125% of what their PE ratios are.
Yeah.
We're not even close to that today. There's two stocks that are absolutely ridiculously outstanding and they're pretty high. But when you take them relative to what their earnings are, they're still looking at potentially another 50% profit next year. NVIDIA is one of them, right? So you take a look at NVIDIA. I mean, NVIDIA is leading the world. NVIDIA may be leading the charge, and that's the reason why technology is really producing forward. But there's really one basic thing that's really going to make a huge destruction of the markets if it happens, and it's a recession. And what can actually create the recession? Lowering interest rates quickly, just
You do
like
it
they
too fast,
raised
right?
interest rates quickly, right? So those things have happened in the past. You've had a number of different catastrophic returns and cuts in rates. You can go all the way back to the 1920s and 30s. And then you can go even, and there's a number of different things that have actually happened where when the Fed actually cut rates, the market boomed through certain times. So to be this, I don't know, crystal ball Nostradamus of this bubble is here, we got to be really ready for it. Things are going to happen. The market goes up and the market goes down. And as Peggy said, if we're preparing for it and you don't have all your money in one spot or you don't have all your eggs in one basket, you're going to be fine.
Yeah, Jeff, diversification helps mitigate any impact of a market meltdown. So we always make sure with our clients that we diversify them into all different great things, protectionary products that can help them. So we're not worrying about, oh my God, the sky's falling, all of your money's going somewhere. We have people in very protectionary things that will help them through any kind of bubble that's going to happen.
When it comes to these financial markets and the way that they all work, and when I say financial markets, I'm the layperson over here who doesn't, I'm not near as plugged in as someone who, does this for a living like you guys do. But when I look at it, it almost looks like when one goes up, one comes down. It's almost kind of like this weird seesaw effect, so to speak. So, and it's kind of a strange place right now because as the interest rates have gone up, people thought the stock market was just going to just get crushed, right?
Right.
And that didn't really happen. So
Nope.
we are kind of living in this weird place right now where you kind of have a high-end stock market, but then the interest rates have also been holding where they are. But the good news with that is there are options more than just that one place called the stock market for people to put their money, correct?
Absolutely, no doubt. We like to spread the investments across different asset classes, such as stocks, bonds, real estate, commodities, to help reduce any kind of risk. We also like the protectionary products of annuities or long-term care insurance and life insurance. We like to put people in a whole bunch of our different buckets to be very protectionary for them, as we say. That way they're not worrying about things like this. We're not putting everybody's money into, let's say, one egg basket. We have this done across lots of baskets. So people aren't worrying, oh my God, what are we going to do? They're okay.
It's the difference between a plan and a product, or a plan and a specific solution, right? So a solution could be a stock, it could be a bond, it could be an annuity. But if you have only one of them, or you only have a certain limited amounts of them, for instance, most people that come to us that are pre-retirees, their two biggest assets are their home and their 401k.
Correct.
Right? And your home is beautiful. You can live in it. It's yours. It's created lasting memories. You can eventually sell it. And if it is paid off, it's literally sunk money, right? You can't just say, hey, I'm going to take $100,000 out of my house today. Well, you can, but you're going to have to take a loan to it to some degree, right? So we do get that question asked a lot. Should I pay my house off? It depends on, what part of your life you're in.
Right.
Is it a cash flow issue? Are you going to move? So there's lots of different things that go with that. And we could talk about that maybe in a different segment. But going back to your house as one of your biggest assets, it's literally a dead asset is what we call it. So the living asset in which you have is all your other retirement assets in which you can use. Maybe it's bank account money. Maybe it's all of the above. But the fact of the matter is, if most people actually have the largest amount of their retirement assets in their retirement plan, and then when we look at that, they're 99% invested, that becomes a big problem when when people hear that there's a bubble coming. Right?
Yep.
Warren Buffett said it best. Be greedy when people are cautious, and cautious when people are greedy. And the best investor on planet Earth, in fact, some of the best investors, Peter Lynch, Ray Dalio, Warren Buffett, they've made their fortunes when it looked like the sky was falling, right? Because they've taken advantage of the contrarian approach of buy low, sell high. And when things did hit the fan, when that bubble did happen, they have the option of actually taking some of the dry powder, the cash, the liquid amounts of money in which they have sitting on the side, and utilizing that to buy it for the future, right? So everybody can live through a bubble. Nobody's going to go out of business unless you actually have all your money in one basket, and that's what you're going to be surviving on. But as Peggy was mentioning before, by dividing up your plan into a certain number of different products and solutions, including something that's going to produce you guaranteed income, something that's going to provide you with liquidity, something that's going to provide you with tomorrow's rainy day funds or future growth, all of the above is all of the above is sequenced into a plan that when the bubble does happen, you don't have to touch the money that's involved in the bubble. Because the other part of your plan is providing you with the safe haven and the retirement assets in which you need to create your income that you can meet your needs. And you'll actually ride it out. And in the end, you'll actually wind up a lot better if you have those assets that are being able to be positioned in that bubble.
Well, here's one of the things that you kind of mentioned that I think is, it's funny. Have you guys seen the movie The Big Short?
Yes.
Okay, so there's a line in that movie that I think is kind of appropriate right now. It could be, as you're listening to the fear-mongers over here talk about whatever segment of the economy they want to talk about today. We're talking about the stock market right now. So there's it's a bubble. Well, there's a line from that movie that was like, you smell that? It smells like opportunity.
Yes, absolutely.
I would say that for many times, whenever you see those people over there, getting into this weird place of like, oh my gosh, the sky is falling. Well, maybe that just means that we need to build a tent or whatever it may be. But there are other opportunities. And I feel like that, as you're talking about this plan, if you're able to look at these other opportunities as a way to grow, you don't necessarily have to look at maybe one segment of your portfolio. Let's say it is the stock market, and say, oh my gosh, I've got to get out before it crashes or anything like that. Instead, you ride through the storm, and on the other end, you could actually end up making more money because, historically speaking, whenever there's a big crash, the rebound afterwards is usually pretty good.
It's pretty darn good, right? Yep.
Yeah,
absolutely. You know, Noah didn't start building the ark when it started raining.
Right.
He started doing that a long time before that, right? So you start preparing for it before. Now, everybody can be scared of a bubble. I don't think, as you mentioned, why be scared of something? What we can do is we can look at it as an opportunity instead of being scared of it. But if we're prepared, it's a difference between being proactive versus being reactive, right? So if we're not prepared for it, we're going to be reactionary. We may sell out of it. We may panic. Right. We actually may have all our eggs in one basket, unfortunately. And then we also get to something else. If you're not an investor, then you shouldn't be in an investment. Okay?
Right.
Yeah.
I mean, we just mentioned we were on the beach. We were on the beach the other day, and a client, unnamed, will remain unnamed, but they have the risk tolerance of 0.
Right.
Okay? I got a note just yesterday saying that they wanted to buy into a private IPO. Now, this is beyond speculative. Now, this is a person that does not want to lose one nickel, but now thinks that taking $20,000 of his hard-earned money and putting it into a speculative position is not risky. So again, it comes down to perception of what something happens, right? Mm-hmm. So I wrote him a note back. I said, well, it's pretty interesting. I said, if you make 100%, your 20,000 becomes 40. But if you lose 25%, your 20,000 is going to become 15 grand. Yeah. That $5,000, which you said you couldn't take your wife on a vacation, that's $5,000 that would have been spent well, and you'd have a lot less anxiety and a lot less headaches if you would just take the money and instead of using it for speculation, use it for something that can create you a lasting memory or something that creates you some instant joy, right? So it's, you know, if you're not an investor, you should not be investing. And what I mean by that is if you don't have the assets or you don't have the wherewithal, you don't have the time horizon, you don't have the stomach, you don't have the sleep insurance in your plan in order to live, right? In order to live out the bubble, you're not going to be a happy camper.
Yeah,
you're not going to be in a happy camper.
We also too, though, Jeff, we like to talk with our clients too about an emergency fund and budgeting. So we would like to tell our clients to maintain an emergency fund with highly liquid investments as well.
Absolutely.
That way, if there ever is something, you know, let's put some money in the money market, right? To be better positioned for future opportunities. That way, when a bubble or something does happen, you know, they know that they still have an emergency fund of money that they will, you know, that's protectionary for them. And also budgeting, that's essential for any retirement planning and managing expenses. So we always like to work that in too to our plans, you know, the diversification, the emergency fund, and budgeting. And we love to keep our clients always informed and focused. Let's be informed about what's going on. We love to tell our clients, you know, if something like this is preparing to happen, you know, we get on the phone with them. We do 3-month phone calls, right, Randy? Not yearly phone calls, but also 3-month phone calls where we talk to our clients and we prepare them for things like this, or we start to discuss things like this so they know exactly what's coming, or they know exactly what we're doing to prepare for any kind of catastrophe that's about to happen.
I love that. And you know what? For people that are listening to this show right now, and maybe they've got a different financial advisor, and they do have questions about the news that they see every day, this might be a good time for them to come see you so that you can kind of give them some reassurance that, hey, regardless of the situation, you create a plan for what is possibly coming, and at the very least, they feel at least safer and they feel better about the idea of moving forward and not like the sky is falling all the time.
Exactly. And always remember, too, the people like, you know, Harry Dent, he's a Harvard-educated economist. He also sells a lot of books. And what sells a lot of books? Fear.
I was about to say bad news.
So bad news sells.
Murder mysteries.
So this is what, you know, this is what people out there do. You know, we're going to put people into fear. We're going to sell lots of books. I mean, you know, and we're going to make predictions of the biggest crash of our lifetime, which, you know, I don't think that's going to happen. But, you know, there's always those fear mongers out there who are, you know, selling things. And I tell people, or I tell our clients, you know, we have clients that come in all the time, right, Randy? Oh my God, is the stock market crashing? You know, and we have to talk to them and say, oh, did you just listen to the news? Yeah, I did.
Yeah.
Didn't you hear that so-and-so said that this is going to be the end of the world?
Right.
You know, we just talk them off the ledge. It's okay, you know?
The filter of information as it gets to the actual news outlets from what's really happening in real time, whether it be on Wall Street or wherever, people would have their investments. The time that it takes for it to go from, let's say, Wall Street to the news cycle is actually a much longer time than people think.
Yeah.
So what the news may be reporting or whatnot, a lot of that kind of almost becomes a speculative because of the fact that they're talking about something that kind of is in arrears, so to speak.
Yep.
When it comes to that type of information. So
Yes. And for us to think that the market is going to crumble by 86%, like Harry Dent is proclaiming that it's going to, would be an absolute catastrophic event. You know, when you take into consideration the last number of bear market cycles, the 2000 to 2002 was a 31-month period of time the market went down 49%.
right.
That was cataclysmic, right?
Yeah.
When in 1987, you had a market fall of 4 months of 34%. That is cataclysmic. He's talking about double that. Could you imagine an 86% reduction in the Standard & Poor's 500 or the global economy? I mean, what are we going to be doing? Eating walnuts?
Well, that's the whole thing.
What's going on?
The idea of that is a complete displacement, not of money. It's a displacement of time. We will literally have to go back to a time when, and I just don't think the world would be able to do a situation where it's almost like survival of the fittest and barter system for everything.
Yeah, right.
Correct.
Because that's kind of what would end up happening in that kind of a scenario of 86 to 90%,
Yep.
of a global crash.
And those are people who love gold, right?
Yeah.
Those are people. Oh, I'm buying gold right now because if everything goes to hell in a handbasket, I've got
We
gold.
got gold. I got gold.
Well, how many
Bring my little
loaves of
pouch
bread
full
have you? How many loaves of bread have you bought with gold over the last 10 years? Or
That's a
how many
great
times have you
question. I can
filled?
tell you the answer is zero.
Zero. How many times have you filled up your gas tank? Zero.
Zero.
Right? No one's taking a gold nugget out with a shaving and say, okay, put your hand out. Let me just shave some of this off. Are we good? That's not happening. It's
And
just
if
silly.
that does happen, by the way, I'm just going to say, where is the Godfather? And can you please make sure that I'm good in this whole situation?
That's right.
Right?
Yes.
Should you own commodities? Should you own some gold or silver or anything like that? Sure. I mean, but make sure you actually own a darn thing, right? You get all of these commercials with, Gold Line and all these places. Again, it's fear-mongering for them to sell something to you. It's the same story of, run to the bond market, run to this, run to that. You shouldn't run to anything. Just like if the market is booming, you shouldn't be running to the market because it's actually going up, because eventually what's going to happen is it's going to go down. Yeah. And it's this euphoric bounce that actually goes through. It's really called cognitive biases, right? You have people that go through booms and euphorias and displacements and a hurting environment, and whatever your friend's doing, you got to do. But it's that whole, I got to catch up. They call it FOMO, right? Fear of missing out. And it's that fear of missing out that actually causes these little booms and bubbles and busts, because when it gets to the top, who's selling? All the insiders, all of Wall Street's selling as soon as the main street's buying everything, right? And it's the little guy that's getting killed because the main street is the one that's actually putting in their life savings, not the exchange traded funds or the hedge funds or the pension funds or the Wall Street firms. They've already started to exit the deal. Right? And then once the public sees it, those are the ones that are getting hurt because, like you mentioned, Jeff, they're chasing information.
Yeah.
You shouldn't chase information in an investment plan or a retirement plan or an income plan. Those are things that should actually be structured. And this is stuff that we talk about, and Peggy talks about with our clients too, is having your income plan to do one thing. Your income plan is not to grow your assets. Your income plan is to produce what? Income. Your liquidity plan is for a rainy day. It's for an emergency. It's not
fund.
to be invested. Exactly. So people get antsy. They're like, wait, my money's sitting here. It's doing nothing. No, it's not doing nothing. It's doing what it is supposed to do. It's supposed to give you access when something bad happens. Well, nothing bad happened yet. Good. That's a good thing, right? But when something bad does happen, We need to access that. What if it was invested in something bad happens? Then you're going to have the quandary of saying, should I remove it? And then I have to create the loss to actually take care of the problem? No. So everything in your plan has to have a specific spot that actually works well to do the job it's supposed to do.
I mean, you just said it all right there. Just having each part do what it's supposed to do is part of the entire plan. Hey, listen, if you are someone and you've been watching the news and you're thinking to yourself, I need to talk to somebody because I am concerned. And listen, there's a lot of people out there. They have real fear of what's going on, especially when, you see Harry Dent talking about 86% declines in the stock market. I want you to reach out to Peggy and Randy Fisher with retirewithartemis.com and libertyfingroup.llc.com. Go to the websites and, reach out, make an appointment, go talk to Peggy and Randy about what your particular plan is right now, what it could be, and that's even with whatever happens with the stock market. So, Peggy, Randy, this is always fun. But, we had a good time with this. I mean, we got a good Godfather reference in there.
There we go.
Talked about the beach all at the same time.
New Jersey in the house.
We kept Fredo out of it.
Yeah. I'm smart. Listen, thank you guys so much. Thank you so much for listening. Make sure that you like and subscribe wherever you find your favorite podcast right here with the real retirees of New Jersey. We will talk to you next time.
We are an independent financial services firm helping individuals create retirement strategies using a variety of financial and insurance products to custom suit their needs and objectives. Investment advisor services offered through Artemis Wealth Advisors, a registered investment advisor. Exposure to ideas and financial vehicles discussed should not be considered investment advice or recommendation to buy or sell any financial vehicle. Past performance is not a guarantee of future results. Investments can fluctuate and when redeemed may be worth more or less than when originally invested. Artemis Wealth Advisors is not affiliated with nor endorsed by the Social Security Administration or any other government agency and does not provide legal or tax advice. Please consult with your attorney, accountant, and or tax advisor for advice concerning your particular circumstances. Annuity guarantees rely solely on the financial strength and claims-paying ability of the issuing insurance company. By contacting us, you may be provided with information about insurance and annuity products offered through Randolph A. Fisher, insurance license number 9616074, and Liberty Financial Group, LLC, and Peggy Fisher, national license number 189-42003 and 570-5833.